Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 5th, 2026, and we're diving into STERIS's latest earnings report for the fiscal third quarter of 2026. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. STERIS has just released their Q3 results, and there's a lot to unpack, from revenue growth to their strategic outlook.
Revenue and profitability overview. Let's start with the top line. STERIS reported a total revenue of $1.5 billion for the third quarter, marking a 9% increase from the previous year. John, what are the key drivers behind this growth?
Absolutely. The revenue growth is primarily driven by strong performance across all segments, particularly in healthcare and applied sterilization technologies. The company also benefited from an 8% constant currency organic revenue growth, which indicates robust underlying business performance.
And how does this translate into profitability?
Well, STERIS's adjusted EPS came in at $2.53, exactly meeting the analyst's forecast. This reflects a solid execution by their commercial teams and effective cost management, despite facing increased tariff headwinds.
Segment performance breakdown. John, can you break down the performance across STERIS's different segments?
Of course. The healthcare segment saw a 9% revenue increase to $1.1 billion, driven by improvements in service, consumable, and capital equipment revenues. Applied Sterilization Technologies, or AST, reported an impressive 11% growth, with significant contributions from service and capital equipment. Lastly, Life Sciences grew by 7%, bolstered by consumable revenue growth.
It seems like a well-rounded performance across the board.
Indeed, it is. Each segment has shown resilience and growth, contributing to the overall positive financial results.
Cash flow and financial health. Let's talk about cash flow. STERIS reported net cash from operations of $1.0 billion for the first 9 months. How does this impact their financial health?
This is a strong indicator of financial health. The free cash flow of $737.6 million, up from $588.1 million last year, shows that STERIS is effectively converting its earnings into cash, which can be used for debt repayment, dividends, and share repurchases.
And what about their capital expenditures?
They are expected to be around $375 million for the fiscal year, which is a strategic investment to support future growth and operational efficiency.
Future outlook and strategic initiatives. Looking ahead, what is STERIS's outlook for the rest of fiscal 2026?
STERIS has maintained its fiscal 2026 outlook, expecting revenue growth of 8 to 9% and adjusted EPS between 10.15 and 10.30. However, they anticipate a $55 million impact from tariffs, which is an increase from previous estimates.
How is the company planning to navigate these challenges?
They are focusing on cost discipline and leveraging their diversified portfolio to mitigate these headwinds. The strong execution by their commercial teams will be crucial in achieving their targets.
Key takeaways. In summary, STERIS has delivered a solid performance in Q3 2026, with strong revenue growth and profitability. Their strategic initiatives and disciplined cost management are key to navigating future challenges. Thank you, John, for your insights.
Thank you for having me. It's been a pleasure discussing STERIS's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on STERIS's performance in the comments below.